now that we've studied the head and shoulders reversal pattern for the uptrend, we need to know the differences between this reversal pattern and the one on a downtrend. We also discuss what happens when the head and shoulder pattern fails and some trading strategies that might be useful during the formation of the head and shoulder pattern. Let's now look at the inverse head and shoulder pattern first. This is a mirror image of the head and shoulders pattern that occurs in a falling market. However, we know that in a falling market, it takes a huge amount of effort and support to lift something that's falling and reverse it. Psychologically, taking a long position when there are no buyers and all the news is so pessimistic about the future of the currency's economy, etc., requires a lot of courage, whether it's the stock market or the foreign exchange market or futures or commodities or any other market. Therefore, unlike the head and shoulders reversal on an uptrend where the volumes were lower on peaks, in the inverse head and shoulder pattern, volumes are high at the troughs. This is because it takes a significant amount of buying to reverse the fall or at least slow down the momentum. At the initial formation, the formation of the left shoulder, volumes tend to be low since the market is already short and selling is saturating. The head is also marked with low volumes. However, the rally from the head to the neckline should be backed by a significant increase in volume. As we have mentioned, it requires aggressive buying to push the currency upwards. Now, the move back to the right shoulder should be on low volume, and the breakout from the neckline should be backed by much higher volume since, again, it requires aggressive buying for a breakout. A lot of short traders would also start looking to square their positions during this formation and maybe initiate longs at this stage. After the breakout, it's common to see the price retracing back to the neckline on light volumes for a rally to the minimum price target equal to the distance between the neckline and the head. The same measurement principles that apply to the head and shoulder on an uptrend will apply here also. Now, for both the head and shoulder formations, a close below the neckline after a breakout during the price retracement signifies a failure of the head and shoulder pattern. Remember that the neckline played a strong role as a resistance in the inverse head and shoulder and must provide support to the return move post the breakout. If the neckline does not provide support and there is a close below the neckline, a significant close below the neckline, the head and shoulder pattern would have failed and prices may either consolidate again or continue in the direction of the original trend. The inverse head and shoulder pattern would typically be larger in size and duration than a head and shoulder reversal in an uptrend, as it would take much more effort to initiate longs in a falling market than to sell or square in a failing rally. Now let's discuss a few trading tactics that traders might use either during the formation of the head and shoulders pattern or post the formation. So the prices may take months to form. However, traders do not usually wait till the entire head and shoulder pattern is formed. They start trading during the pattern formation so that since no one can confidently call it a head and shoulders pattern until after the pattern has been completed. However, the failure of the head to sustain and retrace back to the neckline is a sufficient indicator to square shorts and start initiating longs. The right shoulder point, where it should find support at the left shoulder point, could be a possible entry position all the way down to the head. If prices trace all the way down to the head, it could be the formation of a double bottom, in which case prices should rebound and head towards the neckline. When prices conclusively break the neckline, traders wait for retracements to add to their long positions. So next we look at the continuation head and shoulders pattern, which would complete our discussion of all the various head and shoulder patterns that you could find in the market.